Hello traders, welcome you all to today's new execution video. Today was monthly expiry and today's date was 25th of May. Now we'll understand what was the trade logic behind today's trade.
Okay, so here is my trade order book, guys, and here is the trade execution timings. This was the yesterday's selling hedged position which I created, which I showed yesterday to you all, guys, that I sold 18,350 calls at price of 20.5 and I collected some 10 to 11 rupees of premium. Okay, and the hedged position, the hedged call I bought was at 1.5 and I sold it at 1.3. So here I made a good amount of money. Okay, in selling, option selling. So I made around 1.4% in this trade over my entire capital. Then now let's see the timings of the entry. My entry was at 9:30. Okay, this is 9:30 in 18,400 put. This is 18,400 put and entry is at 9:30 and another its exit is at 9:34.22. Its exit is at 9:34.22 and second trade I placed was in Nifty 18,200 call and it was taken at 940.58 and exit was at 943. Okay, so now let's understand what are the let's mark the trade entries first on spot chart and then we will understand the trade idea. Okay, okay traders, so we are on Nifty futures chart and it was a monthly expiry and this is a 1 minute time frame. I will just mark 9:30 candle as my short side entry and I will mark 9:34 candle as a exit. Okay, so this is 9:30 candle and here is 9:34 candle. You can see this is a 9:34 candle, this is a 9:34 candle. Okay, and my entry and my logic behind this entry was that market sort of opened and showed that it is liquidating both buyers and sellers, then went up and then sort of formed a range. So my ideal entry should be here. My ideal entry should be after this range breakout. But why didn't I enter at this range breakout? Because it was an opening of the market. So as you all know that in morning momentum is very good, but market tries to like trap all the buyers and sellers and get liquidity for big institutions. Okay, big institutions are accumulating or distributing in the morning, so that's the reason I didn't enter before 9:25, 9:28, and after 9:28 I saw that market could possibly break the day low or it could reverse from the day low. Okay, this was the two possibilities. If we consider this as an order block, then market could possibly respect this order block and go higher. But what market did was that market broke this broke this morning low, and then it didn't went up directly, didn't went up instantly, but instead it sort of holded it after breaking the day low. So my entry was right over here at day low break on 9:30 candle and my stop loss was around this candle high and my target was approximately 18,210 215 levels on futures chart. But what happened was I saw that market sort of after breaking the day low it is getting rejected, and after rejecting it's again coming down to invite sellers. So once the sellers are invited, it will easily go up and take the stop losses. So what I did was I exited over here in profit of around uh, 10 11 12 points on future start. Okay, so after this exit, what I told you guys, the market was trying to invite sellers and then take the stop losses of the sellers. So my call entry was based on this logic only, that after liquidating the day low, what is market doing? After breaking the day low, it started forming a small range in morning. So this could be the morning bottom reversal. This could be the morning bottom reversal. So my entry was right after this range breakout over here. Okay, and my stop loss was at this candle low. This candle low was my stop loss, and my first target was day high. That was easily achieved. But what happened was once I got in profit of around 2-3 points in options, as it was monthly expiry and as a buyer, option buyer, I am very much scared of my expiries. So what I did was placed my stop loss at cost, stop loss market at cost, and this candle, this 942, 943 candle, sort of took my stop loss. Okay, sort of took my cost to cost stop loss and then headed higher. So I was exited at this level. I exited my positions over here at cost. So this was the day end for me. Okay, now we'll see how much money, like in points, in terms of option points, how much I made today on expiry. Okay, trader. So now we are again on my order book. So now we are again on my order book, and here we can see. Wait a minute. Yeah. So here we can see that in yesterday's selling position which I created, I made around 11 points over here. Okay, 11 points in profit I collected in decay, and this this short trade, option buying short trade, I made 10 points in options, approximately 9.2, or consider it 10. And this trade I made around 1 point, because this was the cost to cost exit. This was the cost to cost exit of the trade. My cost to cost stop loss got triggered. Okay, my cost to cost stop loss got triggered, and I made around 1 rupees. So this 1 rupees can at least cover all my day's charges. And here I made around 10 plus 10, so 20 points in options altogether. And okay, traders, so now let's understand what market could do tomorrow. Let us go on a daily time frame. On daily time frame, you can see market is sort of forming a range over here, at a supply level, and bank nifty already liquidated all-time high. So after liquidating all-time high, there is a high probability that bank nifty could go down, and it like take some more liquidity to go up, or it could just show some pullbacks on higher time frames. So market is sort of tapped in this supply zone of daily time frame, and then it started forming a range. So if we see the structure, then we can see that market, after this whole bull run, after the fall and after the start of bull run, market didn't market never broke the last low, the last major swing low. So now I think that if this range breakout happens to the downside, market could come over here somewhere around 17,600 or 17,000 100 200 levels, and then market could start pushing upside. And if it breaks over here, then it could instantly come down and trap the buyers, and then sort of accumulate and liquidate over here, and then move upside. It can't go in 90-degree from here, because market situations are not like very much bullish. Nasdaq is very much bullish, so IT sector is booming currently. Okay, so it's a IT sector and a banking sector which are leading the markets, but there is always a fear currently, as there is a news of recession or some or the other thing coming. Okay, so that's the reason market is doing something nonsense, accumulating or distributing here at this range from 18,450 to 18,050. Okay, so if we get a breakout to the upside, then wait for the retest and wait for the early buyers to get trapped out. Once the early buyers get trapped out, we can plan a call side trade over here with the target of 18,800. Okay, we can easily achieve 18,800 if we get a breakout of this range. And after the range breakout, if market retests and throws out the weak hands, throws out the weak buyers, then market could easily head up. But I don't think at this point market is currently having that much of liquidity to go upside. So I think that market could go to 18,450 levels, and then sort of again pull back or consolidate over here in this range, and then break out. Then if market consolidates more in this range and then breaks out, then the breakout will be very very strong. Then it could take all time high easily. Then it could even go to 19,000 levels. But if it breaks to the downside, then I think market will sort of take liquidity from these levels, 18,550 levels, 18,530 to 50 levels, and then head higher. Or it could even come to fill this fair value gap, this gap up at 18,100 level, and then head higher. Or it could just accumulate or distribute over here. It could just consolidate more in this range and then give a nice breakout. Okay, so I hope you all like this video. I hope you all learned something from my trading, from my trade ideas, from my trade breakdowns. And if you like the content, please like, subscribe to my channel, and hit that bell icon so that you don't miss any of my new upcoming videos. Thank you.